finance today. With everything going on currently with the coronavirus, it's almost inconceivable that our stock market isn't totally obliterated. Today, we saw the Dow jump 4%, closing at 24,600 points. We saw the S&P close at 2950, and we saw the NASDAQ Composite close at 9,200. This means that the NASDAQ is actually up year to date. Now, the NASDAQ's considered to be more tech stock heavy, so that explains that situation a little bit. But when we're looking at this virus and the lack of economic output compared with the financial markets, there's a huge separation there. How is the stock market performing? Not terribly when our economy is in the toilet. To put everything into perspective, we're currently sitting at an unemployment rate of 14.7%. Now, if you include people who are still employed but are not working due to any COVID-related reasons, that number increases to 20%, or 1 in 5 people. The only time we have gotten unemployment numbers even close to this was way back in the Great Depression when we had a 25% unemployment rate. A little history lesson now. In the Great Depression, starting with what we call Black Thursday, the stock market fell 11%. Friday, the stock market was propped up a little bit. The following Monday, another 14% fall. And then on Black Tuesday, another 11% fall. From 1929, the Dow reached an all-time high at the time of 381 points. By 1933, the stock market was at a total of 41 points. That's an 89% decrease from all-time highs. In the Great Depression, our stock market was absolutely destroyed, and our unemployment rate was only 5% higher than it currently sits at. We had a couple turbulent trading weeks in February and March, but aside from that, if you look at the Dow and the other composites, you may start to believe that the economy is on a quick road to recovery. But if you look at the economic data, if you look at earnings reports by the numbers, if you look at GDPs, then you'll quickly realize that that is not the case. And many people will say that we haven't even begun to feel some of the longer term fallouts associated with this lockdown and with this virus. We've seen bad earnings reports. We've seen bankruptcies from brick and mortar chains and retail firms. We've seen decreases in GDP both domestically and abroad. But aside from the sectors of the economy which are plummeting, what is insulating the stock market from the reality of the economy? Today, Moderna announced some very great news regarding a new drug to combat the coronavirus. In the announcement, they said that 8 out of 8 participants in the trial had great progress and showed antibodies without ever having the coronavirus. Moderna stock was up 20% today and is currently up 400% year to date. So that definitely explains some of the bullishness of the market today in general. Other than that, what are we seeing in the economy? We're seeing the Federal Reserve and head chairman Jerome Powell print more money than ever conceived before. Now, the Federal Reserve is giving this directly to the public in forms of checks, trying to stimulate the economy by getting them to spend, and they're also giving money to businesses to keep people on payroll and in order to discourage any bankruptcies. With the lockdown, nobody's sure if this is enough stimulus or if it will help the businesses ward off bankruptcy in the longer term. So apart from the Fed's actions, this is my hypothesis. Investors really don't have anywhere else to put their money at this point. There is so much liquidity in our economy that investors aren't going anywhere else besides the stock market. Typically, when there's turmoil in the United States stock market, investors will take their money and put it overseas. They will go to Japan, they'll go to Germany, they'll go to Hong Kong. other financial epicenters around the world to seek the returns that they're after. Either that, or they will put their money in safe havens like bonds, gold, some other commodities, anywhere to get a good return and keep their money safe. Right now, there is virtually no stock market that is unaffected by this pandemic. If you look overseas, this is a global pandemic. Every single country is facing the same financial and health stressors that the United States is facing. And if you look at bonds, bonds have the smallest yields for a very, very long time. The dollar is extremely strong and gold has skyrocketed in price. These other investment vehicles are not giving investors the returns that they need to keep their money growing and turning over. So they're taking it and they're putting it right back into the stock exchange in the United States. All of this excess money is propping up the stock market because investors have nowhere else to put their money. With no other place to put their money, investors keep circulating their funds back into the New York Stock Exchange and the NASDAQ. Investors seeking positive returns and the Fed continuously printing money are propping up the stock market while we watch the fundamentals crumble beneath our feet. Investors are piling money into stocks that are continuously losing money, earnings reports in which companies report losing even more money than expected. Those same companies, the stock is increasing the next day, and stocks that report great earnings calls are falling. All in all, the amount of money in circulation and the Fed's actions have saved the financial markets, but they may not be able to save the economy. Right now, we are witnessing the largest divide between the stock market and the economy that we have ever seen in history. Everything considered, this is a great thing for 401ks and investment portfolios. But I would not recommend taking any short positions because the stock market is playing by different rules than we've ever seen before. Now more than ever, make sure that you analyze the companies that you're interested in investing in and check out the fundamentals, because I guarantee you there will be some stocks that everybody's piling into right now that declare bankruptcy out of nowhere a few months from now. And I also guarantee you that there are some hidden gems that nobody's looking out for right now, but they have incredible balance sheets. They can survive everything that's coming, and those will be the stocks that grow steadily and will be great investments a few years down the line. Thanks for tuning into Finance Today. Hope you like the brand new set that we'll be recording from here on out. Make sure you like, throw any questions and comments down at the bottom, subscribe to the channel, and turn on post notifications for all of our upcoming content. Make sure you tune back in next time. We're going to continue to hook you up with all the best advice, the stock tips, everything. We're going to make you rich.
And I will make you richer than the most powerful CEO in the United States of America.